Alrighty, good morning, everybody. Today's November 25th. We are now heading into holiday weekend, or holiday week. You know, sometimes these trading weeks are really good with a holiday week, and then sometimes they're not. So it just kind of depends. So I don't want to have any preconceived notions of what should or shouldn't happen. Let me double check real quick that my recording is going. I'm hoping that's the case. All right, so well, let's get started. Short version: we're all in the same boat. Everybody's got to do the same thing. There's three phases really that you guys are going to go through when you're learning the software and everything else. But the very first thing, one of the most important things, and I'm glad to see that somebody even posted it this morning. It said, "Good morning, chart readers." Andy, man. Chart reading really is the most important part of what you're doing. Once you're watching the market all day long and you're trying to watch it 90%, trade it 10%. That's about how the breakdown goes. Some people have slightly more active plans, some people have a little less, but the short version is you have to know three things: when the market is likely to continue, where it's likely to go, and where it's likely to stop. And without those three fundamental pieces in place, if you can't look at a chart and go, oh, we should go up to here, down to there, and do it relatively quickly, I always tell people to spend a lot of time on chart reading and the patterns of the trigger lines and the indicators, which we'll go through here in a second. Now, trade entry precision. Um, you know, the closer you get into the best spot, the less money you're going to risk overall. Now, different markets and different conditions have different entry techniques. And, when you buy the bottom or sell the top, I'll show you like with my plan. You don't have to be as precise, but your stops have to be more precise. And that takes us into the third piece, which is trade management. And we spent a lot of time working on entries, and I think trade management is they're all equally important. Reading your charts correct, making sure you get in at the right spot. But the middle one's less important. As long as the market goes where it's supposed to go and doesn't go where it's not supposed to go, which is where you put your stop, and you've got the fortitude to stay in it, you'll be fine even with a bad entry, which many of you guys know that now. In this little PDF document, and I did put these in here for you guys, so they are up at the top. You might just have to scroll up just a little bit here, but I put this PDF, everything needed to win, and then my trading plan in here, which we'll go through as well. And again, I broke this down for you. Obviously, this is pretty much in line with the user guide and everything that it says in the user guide, but it's kind of nice to have it in one spot. And there's, the visual reading of our charts becomes so important to what we do. And when we talk about reading a chart, we're also talking about where are the prices located relative to the trigger lines. And sure as the day is going to start again tomorrow when the sun comes up, if you go short and your price bars are completely outside of your trigger lines going the wrong way, you're going to lose that trade most of the time. So it just doesn't make any sense to trade on the wrong side of the triggers. So, when I say the right side or the wrong side, do you guys understand what I'm saying? So if you're going long, you want to be above the small triggers, short version. If you're going short, you want to be below the small triggers. And then once you get inside of them, anything can happen, and we got to watch out for those situations. But again, chart reading is very simple. where are the bars relative to the triggers in this first example. And then I guess I could go page 2. Um, and again, we don't have to go through this whole thing, but I thought we might be a little slow, but they were very slow, and then they just took off. So there's lots of stuff going on in the market. And if you guys are trading, trade, post pictures. We'll get to them, or hang on to the pictures, and we'll do them all in one big chunk, whatever. Um, and you know, in as early as 2002, 2003, when we had our first trigger lines, it's very easy to see that, when they're crossed down and strong, the opportunity for the market to pull back to them and then keep going, you're going to buy or sell a pullback, and you're going to make money 75% of the time, give or take, as long as you don't run into anything. So this is literally one of the most important pictures. And, there's also a couple different settings that you can do on the trigger line. Small triggers, large triggers, even faster triggers. So what happens is, first you learn how to read it, and then you go in and you say, what's best for me? And our settings might be best for you. I don't know. Again, that's obviously up to you guys. But the short version is, all we're looking to do is, when the market's going down, sell a pullback, get out at support. I mean, that's it. That's short version. I won't belabor that. I wanted to get into, I guess we can go through these pictures as well. But, again, all we're looking for is both triggers to be going down and some type of resistance to help us out. And that's all it really takes for a short trade. You don't need 1,000 rules or anything else. You just need triggers going your way and some type of resistance that helps you. It's just, and then when you don't have a support, I mean, here obviously we make a bottom and we do have some one-to-one support. But as it continues going, you're going to need to use the smaller charts to find out where those entry areas are. If there's one that's available on the big chart, usually that's the right one to use. If there's not one available on the big chart, that's where you have to find your trade on the smaller charts. And a lot of people say, why don't I just trade a big chart? You can. But the problem with just trading a big chart versus a small chart is you don't have the ability to manage trades properly. That's really where the problem comes in, is because if you just said, hey, I'm going to get in here and I'm going to let it run until I get weak triggers at a fib, that would have been your trade from there to there. Or vice versa. If I have divergence at fibs and termination, I'll get in until the triggers get weak and I get to a fib. And so you'd have made all that and all that. What happens is, the smaller the chart you look at, the more opportunity there is for you to talk yourself out of staying in the trade. Is that a good way of saying it? Politically correct way of saying it? When you lose sight of the big picture and where we're really going to, and you start getting hung up on the little picture, like the little small charts, you find a reason to get out. And there are some really good reasons to get out, and some absolutes, which we are going to address. It has to be said, termination conditions. When are you going to stop going short or stop going long? Or, and that's really, short version is, you will stop going long when you get to a line that has either a reverse trigger look where the smalls are below the large, or at least weak triggers at the fib, and it's going to keep you from taking any more long trend trades on the 5-1 chart. Doesn't necessarily mean you can't take a trade from over here and get the rest of that move. It just means that whenever you hit a termination spot, I just want to make sure that, because this is a really different thought process and terminology that a lot of people, when I say it to them, they're like, oh, I didn't think about it like that. So, again, termination conditions are Fibonacci indicators that may reverse the market. And they don't always, because sometimes we have a very strong, super high momentum and they blow through some lines. So again, termination, and we're giving it to you in the context of when you're supposed to be taking trend trades. So, again, when we talk in the user guide about taking trend trades and we talk about, you know, the look before you place your order to get in over here, the key is to make sure that you didn't run into the target before you take your entry. Because if you run into the target before your entry, it's kind of like the trade's already used up. You know what I mean? It's like jumping on the bus to go downtown and you're already in downtown. It just doesn't make any sense. So, anyway, short version, we want to make sure that we don't have any termination conditions in our way, and that's really what we're talking about in this PDF. And then, obviously, all I did was regurgitate that section for in the user guide. So there's nothing new there. They're both the same, the PDF that I use and what's on the website. And a lot of people ask, what are the little pink dots? What are the little yellow dots? And again, the little magenta dots are one-to-ones. So 100% Fibonacci projections. So if we take from A to B and then after the retracement from C, it'll give us one-to-ones down here. So I have them labeled. And then it'll do it, basically again, you'll have that old C will become the new A, and then you'll have ABC, and then as long as the trend stays down, you'll get new one-to-ones. And then you'll get a new ABC, and then you'll get new one-to-ones. So the magenta one-to-ones is, on the small chart, let's just say, for example, one-to-ones become very good at assisting you with first target areas, breakout areas, management areas. When we break one-to-ones, we've always had that trade since 2003. Every time you break the one-to-ones, it usually will keep going as long as you don't lose momentum. But anyway, it's just, does everybody understand this okay? Because I had a couple of people asking me this question, and it's just every little small swing, it's basically a measured move. It's, that distance is added to the retracement. That distance is added to the retracement. And it's the same thing with the big yellow ones. The only difference is the big yellow ones use multiple time frame swings. So it's a larger swing. That's why we call it the large swing one-to-ones. Anyway, short version. This is the killer of all killers, especially if you're a NASDAQ trader. It's really true on pretty much every market. There are a couple times where you can ignore it, and most of the time you never can. Whenever you have I made that too big, didn't I? Whenever you have three divergences in the same area, it can't be three like that keep going higher and higher and higher, or three that keep going lower, lower, lower. That's not really the third divergence that we're worried about. If you were short and you took half and then you were maintaining a short, it's the third. There's two things really at play here. The third divergence in the same area will give you that head and shoulders look like whoever that was in the other room took as long trade. I forgot who it was. Anyway, it doesn't matter who it was. I'll get off on a tangent. Anyway, and then you get the same thing at the top. You get one divergence, two divergences. That's not probably going to be enough to get you out. Usually this is another trade right here. But then the third divergence is the one that is the killer. And it almost always reverses the trend. Not always, but more often than not, which is good enough for us for day trading, right? And then obviously, look, now you know whether we're going up or down. Now you know where we are going to stop taking trend trades. And now, we start to look at, trend trade rules themselves. And again, the whole point of trend trading is to have all of the momentum going your way. I can't make that the right size. There we go. And that's just trigger lines, guys. And you could do trend trades on any time frame chart, any market. You could bring up one chart and you could do trend trades without any trouble on one chart. Now, it gets better with multiple charts because you get long-term, short-term views. But the look for a trend trade is always the same. It's pull back to some type of support or resistance and your triggers, and then pray for the best. And again, I won't belabor too much going through the trend trade rules. We'll take a peek at them. But again, the very first portion, which we've already talked about, is this large trigger being crossed up or down with a lot of strength. And notice I took off the small triggers because the small triggers don't play as much into trend trades. I mean, they do technically, or they at least signal the end of them, the beginning of them or the end of them. But usually in the middle, the small triggers are going up. I mean, so again, the more important visual is that you see the large triggers and the location of the bars, and then when you get a pullback, you can take a trade. I mean, that's the short version. And again, when we talk about taking trades, selling pullbacks, this is the larger chart. And one of the other concepts that we talk about a lot is do not trade into a termination condition area. Don't trade into lines. Make sure you have room to your profit target before taking an entry. So again, what you're going to be looking for is as the bars are going down and you're basically on the, this left edge. So this is what it would look like in real time. Again, somebody tried to tell me that they're like, real time doesn't look the same as historical. I'm like, yeah, it does. It just doesn't always do what it's supposed to do, and that's where the problem comes in. Right? The look is always the same. The outcome is not always the same. And that's what, it takes a minute to get your head wrapped around it. All right, so when we're looking before we do a trade, okay, so we don't know that there's going to be a trade yet. So this is all we can see. I'm trying to make it so it's like the right edge of our chart. So you don't have any other information. You don't, on what was going to happen. That's weird. All right, let's try again. Where the heck did I put that dang picture? My bad. Okay. Anyway, we don't have any information, so what we have to do is we have to look out in advance of where we might be going. And do we have any one-to-ones? Do we have any prior divergence lines? Do we have any fib lines? And if the answer is no, that means that now you're calculating how much room do you have on your trade from your entry spot. Let's just call it 17,761. So how much room do you have from your entry spot down to 1735? So you've got 25 NASDAQ points minimum before you hit support. So that's a really good look for us to take a short trade and to hopefully have the wherewithal to just relax and hang out and stay in it until you get paid. And what happens is the more you look at your smaller chart, the more you're going to find reasons to get out if you're not feeling super comfortable with your large chart read on where it should go and why it should go there. And this is where the chart reading and the trigger line reading becomes so important because, day trading is about having confidence that the market is about to do what you think it's about to do. Does that make sense? And you're willing to, make your bet, $100, $150 on it to see if it actually works or not. So, again, if you're trading on one lot, which I know doesn't sound very sexy, which is fine, but if you start off trading on one lot and you say to yourself, I'm going to take $200 or $300 and I'll just be happy, and then I'll monitor how much further did it go and then what was the condition that made it stop. You'll have much more successful self-education periods, market replay times. Again, get into the right trade on replay. That's fine. Take $200 or $300. That's fine on your one lot. And then just track where did it go. And then you start to formulate your plan and you say, okay, maybe I'll take $200 or $300 on my first ones get to break even, and then let the second one run when you're ready to add on a second contract. Usually that's a really good way to do it. It's tempting to trade 2 or 4 or 6 or 10 of them on simulator, but practice with one and then two first and get your processes down, and then you can trade like Pete and drop 25 lots on people. Right? So, again, it's all about building up. The other part we talk about, so again, just to kind of look at it from a two chart perspective here. Um, let's see if I can get one more out of that. When we look at a large chart, it's very tempting for people to say, oh, we got close to resistance, so I'm not going to have enough room to my target. So let me do this. I mean, this is such an important picture here because a lot of people who are new make this mistake or get overly cautious when they shouldn't, I guess is a better way of putting it. Here, let's put this in here. So, and again, just easier for me to blow up pictures this way. So again, when you're calculating your room for your target, you're not calculating it from here because that's not your target from your entry. Does that make sense? This is your entry. So you're calculating from 77.28, give or take, up to 77.51 minimum. And then you have to go in and look at the strength of the trigger lines as the market reaches this area, and you ask yourself the simple question that we always ask ourselves, which is what? How wide and how strong are the trigger lines? And when they're super, super, super wide, what do we say? The fib area could break. Now, you don't have to stay in a trade, right? But if your plan says stay in a trade, you may still be long over here, or maybe even have added on to a position. Who knows? So again, calculating room to a target, it's not tricky, but just make sure you're doing it from your entry. And even if you've got close, that's okay. Because they usually are going to get the rest of it at least when the trigger lines are this strong. And you don't even have to really look at your little chart. It's pretty easy. But again, when you look at your little chart, you can see, I mean, it's the same spot, circle, circle. So very clear, very easy, multiple support with trigger lines. This is the holy grail of your trend trades, obviously. Breaking fibs, super strong triggers, everything's perfect. And then you can see, I mean, as if you took 51 at a profit target, you'd be happy, but not even the small triggers on the small chart suggested we were going down. So, until we got maybe to 62, this is the first spot that it has any type of issue, because it's the very first time that the triggers get a little bit weak and we got a pivot stop out, but even that's pretty darn weak. But a good place to protect your money for sure. All right, let me roll on. And I'm doing this little slower version so the new users hopefully can see. Again, it's not, I know there's a lot of lines on the chart, but in the end, it's strong triggers, pull back to support or resistance on the big chart. If you don't have it, use support or resistance on the little chart. Fair enough. And then, one of the things that scares people, I guess, is, can I say? I can say that, right? When you're brand new and you're like, damn it, I'm scared, I'm not sure, because the market was really coming up at me. One of the harder things to kind of grasp, I guess, in the beginning is that the pullback that's being made on the big chart that eventually looks like the perfect short trade. On the smaller chart, you could have the triggers coming up at you, the market going up pretty quickly on the small chart. And, with our objective to sell as high as possible, in order to sell high, you have to sell when the market's going up. Does that make sense? but it's only going up on a little chart a little bit, and it's still inside of, the 1 bar on the big chart. And I think, again, it's just one of those things that on the S&P or crude oil, it's vital to get in really close to the area that, resistance that might hold. On the NASDAQ, you can have a little more confirmation. They have a lot more running room and freedom to run. So, you know, entry precision on different markets is more important than other markets. And again, I suggest don't try to trade the NASDAQ when you're brand new. It's just not, it's just too difficult. It's just, you got to get good on the smaller, slower charts. So that way you get, ultimately you're looking for a look, right? And again, every time I highlight the look, it looks obvious, doesn't it? Strong triggers, pull back to support, nothing in the way until you get to resistance. All we want to do is place a limit order to buy close. I mean, some people will say, I'll wait for confirmation and get a bar close up. And again, there are certain times and certain looks on your charts where everything is so perfect. It's usually better to buy on the way down than it is on the way up, but it doesn't really matter in the end. As long as your stop is outside of the area where it's not supposed to go, and the market eventually does what it's supposed to do, which is get to resistance, then it doesn't really matter whether you're in here or a few ticks higher or a couple of ticks higher. It doesn't matter. The more important matter is where your stop is. Does that make sense? So you really have to put your stop in the right spot, and you can have a shitty entry and still make plenty of money. I've done it many times. Right? So, oops, that's a very big picture. One of the other trend trade looks I think that gets a lot of new users is when your large triggers on your entry chart and the large triggers from the big chart are split apart. You know what I mean? We call it a split trigger look. Let's see if it's even written out here. Let's see. And again, you don't know. Whenever both triggers are in the exact same spot, it makes it really easy. And this is a more difficult one because if you don't go from the mid band and here and it runs up $7,000 worth, you're going to be really pissed off you didn't take it. And then if it goes if you take it and it loses and it goes down to here and then runs for 7,000, you'll be mad about losing and you might not take the second one. So again, we put together what I think is probably the easiest rule that you can, whenever you have a split trigger situation, just wait for an up bar. So that way, if it happens from the big triggers, the larger chart trigger is great. If it happens from the smaller chart trigger is great, but just use an entry bar. Is that easy? That just solves the whole entire, and then obviously, you can see if you use the entry bar, you had some money to be made, and then they kind of gave up. But anyway. All right. So everybody okay with this idea? And again, when we're looking at it, you don't know which one it's going to be. It's like, I hope it's down here because there's more money to be made, but could be there. And again, short version, wait for a reversal bar to enter, and then you don't have to guess as to which area it's going to be. Let's see. Okay. Now, split trigger trades are also ones that I don't know why, but they sometimes don't follow through all the way. And again, look, this would be our trade after the reversal bar up. Okay. Everybody all right with that? I think so. Stop would go below the low after the up bar. And then ultimately, we get pretty close to a fib and we get a pivot stop out. Again, once we get these small triggers rolling below the large, you're going to at least make it to the synthetic triggers, but there's no support in there anymore, right? So there's no reason to think we're going long. And then, then we get below all the triggers, so there's really not going to be any long. So again, when you get into a split trigger trade, you're also going to start thinking about the management of that trade a little bit quicker. I know this is a lot of info. As you know, this is everything basically, the short version. Um, I say the short version because you can learn the basics for the rules and chart reading in a week or two. That's not really the issue. The issue becomes feeling comfortable enough to execute the trades over and over and over super consistently. And that's the difference between the people that struggle and the people that do well, is they have found their ability to wait for the good ones, the really good ones, and not chew up a bunch of money in between. Um, anyway, very important stuff. All right, moving on. Um, Whenever we're going short or we're going long, it doesn't really matter. Right? What we want to do is we want to initially, if we're getting in at the spot, we want to make sure that our stop is well beyond the triggers and support and resistance lines that are sent there to protect us. Right? So again, if they get down to where your stop is or up to where your stop is, they've broken all of the trigger lines in the areas. And it doesn't mean you can't take a second chance later if the small triggers roll up, but usually the market is really good about not coming and stopping us out if the large chart is in the right look. So is everybody okay with this? And again, if you sell after a reversal bar, you're going to be risking a lot more money. But then after the reversal bar is true, you can also bring that stop up or down some depending. So it's two different ways. The getting in assertively look, stops out of the way, or wait for a reversal bar and then stop below the reversal bar. Everybody okay with that? If you have questions about any of it, stop me. Um, you know, Exiting no matter what. When you're waiting for a trade and you've been waiting for a long time, especially on markets like crude or S&P, it's really hard to get on the concept of, get out, because I was so patient and I waited for the perfect spot and I got in and everything was perfect and blah blah blah. If that pivot gets taken out, just take a small little loser and then you're done until the small triggers roll back up above that area. And again, I can't tell you how many people say, well, I'm just going to leave my stop way down here. And then they get bumped way down here, and then they get tempted to go long again because they're pissed off, but then they're doing the wrong trade. It's kind of like a big compounding no-no that starts to build up. So if you get in at the right spot and you have a pivot, put your stop in there. If they get you, wait for the small triggers to give you a second chance. Everybody okay with that? Pretty easy. The other thing that, especially in the NASDAQ, you cannot horse around with this, but it's pretty much every market on the planet. I personally love to see this look when I start thinking about going the other way. But in the context of I'm going long with a trend trade, if you have a second divergence that's lower than the first, especially when the small triggers never cross up or down or roll over or even close above them, you better get the hell out. And, almost always it will come down to a much lower area, whether it's one-to-ones or the next fib or something, but then you just have to start over. And if you think about it, look, at 10:45, this doesn't take long because it's the NASDAQ, but you're like, okay, there's a bottom. And then it takes off and you might have missed your long trade. So you're like, okay, no big deal. It's, 20 minutes later. So I've waited 20 minutes patiently to get my perfect long signal. And there's nothing in the way and there's a million miles to all my money. And that's the type of thinking that makes you break this rule and say, well, I'm going to stay in anyway. So you can stay in as long as the small triggers aren't going against you. But when they're going against you, man, you will lose your ass 9 ways to Sunday. And again, you could, whether you were short here, way back here, over here, trying to hold, but you can start to see when this happens. Maybe the first divergence, triggers aren't that up, no big deal. You hang in there. And then eventually you get that second higher divergence. And if you were to put your stop where the market shouldn't go, it would be way up over here somewhere. So the difference between, break even trade and losing $300, it's huge, right? I think, anyway, personally. And it's hard because you're like, God, I know if I get out, they're going to freaking go straight down without me. That's the thought process that goes through your head, right? You're like, ugh, the minute I get out, they're going to drop like a brick. If they do, you can get back in, but usually they don't. Now, obviously, as we were talking about it, the exceptions to the rules. This is a higher divergence, but my small triggers are still going down. So they're not even going against me when I'm making divergence. So this is one where I opted to say I'm just going to hold in there and see what happens. Because the large chart's too strong, the triggers weren't really strong against me, and that's really the secret when you're looking at our divergences. What are the triggers doing? Small triggers especially. I mean, small and large, but especially the small triggers. What are they doing? And you'll start to see the pattern pretty quickly that, when you're let's say you're in a short trade. I mean, this is a little bit iffy because it came off of support, but does everybody see this? If you're in a short trade and you have divergence potential and your small triggers are already up, that trade's in trouble over here. And sometimes people will take that last one to kind of get that last bit of a move or, maybe even a breakout. But again, this divergence potential with the small triggers rolling up, this is the spot where you're warned that the party might come to an end. Everybody okay with that? And again, it's just taking the time to read what the triggers are doing when you have divergence. So let's say you were long here. I always think it's a great idea to take some money off at the one-to-ones. I think everybody who's had our software for a long time agrees with that. So if you were long and you take some money off at the one-to-ones and then maybe you added back on after an up bar, whatever the case, however you got long, exiting half of your position at one-to-ones is usually really good medicine. The second part of that is, for me, and this is really one of my termination, I rarely win after I have divergence from a one-to-one. So, and you don't know you're going to have divergence for at least a couple bars, so your exit would be down here somewhere. Which, again, one of those times where it's a little frustrating when you're looking at the right edge of the chart. Because if you're on the right edge of the chart, you're like, do I really want to get out? Everything is up. And again, when you look at, remember one of the things we talked about with termination conditions, where are the triggers located relative to the line? So hopefully this makes sense when you guys look at this from this perspective, whether you're exiting or not. So the yellow one-to-ones are my line of resistance, and where are the triggers? And every time we get to an area of support or resistance, should it break based on trigger strength and location? And whenever your triggers are not going to break above whatever termination line we have on our chart, it's going to run into a rough time, and that's what turns it into an exit signal. So, in divergence from one-to-ones, I've just seen it as very nasty. It usually will go do something like this. All right, now rolling on just a little bit more. And again, I wanted to do kind of a one-on-one thing, where it's a little bit slower. And, and again, exits, this one's pretty much obvious, but you got to say it anyway. If you went short, whether you go short here, wherever you go short, it doesn't matter. Whenever you get to a whole bunch of Fibonacci lines, you have to take that money. You don't have to, but you better have a damn good reason why you're not going to take it. And again, look, to ask the same question that we just asked in the last one, which is, watch, I'll just copy paste it because it's the same logic. Should support break based on trigger strength and location? Are the triggers just about to break through fibs or no? Not even close. So this goes back to your chart reading. Whenever you say, hey, I hit fibs and my triggers are way up here, there's no way that we're going to break through the blue line, so you take your money and then that's the end of it. Anyway, but it's always the same thing. Hit a line, check your triggers. And it could break. I'm not saying it can't break. But again, taking the money is a very, very, very great concept. Post that one in 42. Anyway, moving on. I don't have much more, I don't think. Again, look, this is another exit that I found for new users that works really well. More experienced users will sometimes ignore this, but if you're in a long signal and you get back to any pivot stop out, it never hurts to take half of your position off. So if you're long and you make 150, 200 bucks, whatever it is, it's okay. Take half your money. If it does pull back to the best entry spot, just put that trade back on again. And then ultimately, it's the same thing. We're exiting at pivot stop outs and red lines. And, there are trades where you get to double dip. So some people will stay in because it's so strong on the other chart. Some people will take half and then try to put half back on again, or twice as much. Who knows? Depending on how assertive they are. All right, so the other chart reading concept, large chart, small chart. Again, this one, you kind of lose sight of this one a lot of times. I've lost sight of it. If the triggers are very weak on the large chart, meaning smalls are above the large or smalls are way inside the large, this teeny tiny little pivot stop out can be the end of the party totally. So the weaker the triggers are on the big chart, the more impactful termination conditions on the little chart are going to be. You guys understand that? So if this was super strong and scorching down, like maybe our last picture, right? Depending on the big chart, but if it was super scorching up, then yes, this little pivot stop out's going to probably break. And just pretend that the large chart was so strong that that's the case. Again, in this situation, you don't have to use your imagination. You can see that the triggers are weak, and that means that this is going to have a hell of a lot more power, which means if you hold on and get stopped out up here somewhere above the pivot, you really haven't managed that very well. So weak triggers, anything wrong on the small chart, get the hell out. Got it? Easy. Second higher divergences, same thing, blah, blah, blah. The last little reminder on divergence. And it's like I told you just a minute ago. Look at what your small triggers are doing. And usually it's just a good visual clue. If the small triggers are going lower each time you make a new divergence, the market's just trending. You can have 8 divergences all the way down. It's not until when the trigger lines say that divergence is going to kill you that you have to get out. Does that make sense? And it's hard for a lot of people because you're like, I'm short and I'm up 350 bucks and I had divergence, and then they get out. And then immediately it goes down again. So again, the importance of reading the small triggers when you're looking at divergence. I cannot possibly stress enough for you guys. Everybody okay with that? Anybody have questions on that? If you guys have questions, just stop me at any time. HVA and momentum trades. Again, this is where, you know, the fire hose gets turned on triple. And we don't have to go through much with HVA and momentum trades, but again, it's the same exact look as our trend trades. So all you're looking for to do a momentum trade on any chart is, sorry for the dizziness, all you need is, here, I'm just going to close that. All you need is momentum. So, it doesn't matter what the time frame chart is, the name becomes the same. So look, this is crude oil, and we'll go through it from this morning. So again, 3 o'clock, give or take, London Open, just rough numbers. I mean, again, they had a really nice little downtrend going from midnight. Again, look, I just guess we'll step back one more. So look, this is an example of divergence with weak triggers, followed by lower divergence, followed by pivot stop outs of the divergence, followed by a third lower divergence. So there was about, I don't know, from yesterday at 1 o'clock or 2 o'clock, it only took 12 hours for that to happen. So keep that in mind. After 12 hours of deciding that they didn't want to go up anymore, we finally start to see a push to the downside. And again, it's one of those situations where it's maybe not the easiest trade because again, when you're looking at potentially selling this area, right? So again, when you're in this look and you're thinking, should I even sell this crazy thing? You're looking at your low and it's like coming right from support. You're like, it makes it a much, much, much more difficult short trade. Not that it won't go short, because again, whenever we have ultra wide small triggers, support can break. Or they retest it and then fail, either or. And again, just not the case. So they kept going down, which is nice. There's a couple others. And then ultimately, look, we get a really weak trigger right here. Everybody see that? So at 3:30 a.m., we get a weak trigger. And what I wanted to do is, I don't know what happened. I haven't researched this, but let's just take a look. I just wanted to see what happened on the smaller chart that said, hey, maybe we have a party that's not going to keep going. And we didn't really. I mean, look, you could have gone short there. Probably would have got out with second divergence or even back in. And then there's not a lot of anything. It would have been nicer if there's a little pivot stop out down here with weak triggers. But anyway, weak triggers and closing above all of the other triggers was the end of it. And then obviously, we start the push or the climb, the first climb to the upside, which again, mid bands and fibs is a really good first target. Always. So if you do the first one, mid bands and fibs, you're done. If it goes a little further, you might get a second chance. And then ultimately, a tick or two from a 1-to-1 becomes very difficult to go long into. Now, remember, was it Friday? It was Friday. Man, it was a long weekend. This is one of my favorite looks. And it's in the videos. It's in our management. Right? It's the higher divergence than the last. And it's just one of these patterns that I want you to go back on your chart this week sometime and go find all the large charts that have divergence and then a higher divergence. And then once the triggers roll, what happens? Because it normally makes a pretty big darn move. So again, it's not the divergence down here, and it's not this divergence down here. It's a three-step process. So the steps are step 1 divergence, step 2 higher divergence, step 3 strong triggers going up. And that's where you usually get your easier trades. And then obviously we made it to fibs with the pivot stop out, which pretty much ruined the party to the upside. So again, look, this is very, very, very typical in chart reading. Strong move up. We didn't really get to anything here with strong triggers. So almost 75% of the time, mid bands and fibs is going to hold and get us up there, which it did. And then a lot of people love this gap theory trade, is what they call it. It's just mid bands and fibs, and the large triggers are still screaming up. We have room. Anyway, so you may have gotten 3 or 4 different trades out of this, just depending on how you handled the situation. I did see a couple trades in here this morning. Let me see, Pete. Yours was on crude. This was yesterday? Friday's trade. Anyway, long story short, this is a good example of perhaps a little early based on this chart. Maybe you were using some other logic. And again, just obviously out of the pivot stop out on the larger chart, it's worth noting the ultimate strength of the triggers going up here, which did manage to push us up a little bit further. But trading a 25 lot, take that money, take that money, take the money. All right, so let's keep our chart reading going here on crude oil. Again, we'll get caught up to live here in a second, but does everybody understand termination condition up here at the top? Again, this one's pretty straightforward. I've probably glanced through it too quickly because it's so obvious to me, but anytime you get a pivot stop out and you're at fib areas, you ask yourself the same question. What are the chances of my triggers breaking the fibs or that pivot stop out line? So my small triggers are way down here. So what are my chances? Pretty slim to none to 0. So what happens is you get the divergence, you get the pivot stop out, and then you start finding as many trades as you can get short on as quickly as possible. Or at least that's my logic and my plan. If you get a termination that's supposed to hold and your small triggers start to roll, that's first trade going the other way. And then subsequent trades, obviously, after everything is going your way, this would be a good example of, breaking fibs and having strong triggers and getting a pullback. Is everybody okay with that? So again, look, trend trades in these circles. This is an edge trade, if you will. This is more of a termination, more than anything else. And then short, and let's see what happened. It's crude, so, oops. Shoot, I just got to live. Okay, so I'll give you the big picture, is what I meant to do. So there was a little bit of money able to be made on the way to the downside. A couple ticks here or there. Then we get what I would personally consider a very good bottom. Look, this is a bottom that you would stop going short with, right? You hit a fib, you didn't break through, still probably going down again. this is the type of low right here to me that says really good bottom. And if you're not real familiar with good top, good bottom concept, I've got a list of some videos for you guys to watch. Um, let me clean this up a little bit. Bear with me here. I got a lot of stuff going. All right. Let's do this. I'm just going to drop this list in here. That'll be easier. That way you guys can have a copy of it. And the short version is, again, look, these are kind of videos in order, I think, that will be very, very beneficial for you. So some of these are basic videos. This fourth video down is the one that I'm talking about. Define good tops and bottoms. It's a little bit of an older video, but it's probably, it's one of the best foundational videos for doing high probability trend trades. I mean, it just says if you've got weaker triggers and fibs and divergence and, that the chances of going a lot further the other way are very significant. So, when you start to get your first trade, the idea is a good bottom is going to make that go a lot further. Doesn't have to, but it usually does. So it just gives you the comfort or chart reading ability to keep taking trend trades all the way up until you get to resistance. This is live now. And then now we have the exact same thing in reverse. You see it? We hit fibs and that's all totally cool and everything else, but the second time now we've got a really different, you see how different the trigger lines are? Smalls are below the large. That's a much, much better termination condition for us. And then ultimately, we have to ask ourselves, is this thing going to hold after a good top? And the answer is probably not. Right? So there's a high likelihood that as long as we don't get too much above this, that we're going to continue in a lower direction. Let me bring this back over. Anyway, and then when you get, now we're finally back to live. And you can see, I mean, that all charts basically agree to the same thing. And that's what we're looking for. The small chart had two divergences and a pivot stop out the first time. Over here, I'll put a circle on it. So that was a really good warning that, hey, we like this area. And then all they did was stop out the high really quick. So we got a pivot stop out on the little chart. At the same time, we had a weak trigger 1-to-1 and then getting back below. And, again, if you watch in those videos, one of the things that I talk about is if you have that good of a top, this is where I start looking at market flow or momentum trades, and I'm trying to get in as quickly as possible because of the quality of the top. Does that make sense? So, again, if you're just waiting for a trend trade, I mean, maybe right there was about it. It wasn't the easiest. It didn't get to the best spot, let's put it that way. But, again, that's the thought. Top, everything rolls, take some type of short. So, in my trading plan, oh man, let's see, I hope that didn't, when you move your Ninja Trader the wrong way, alright, I can already see where this is going. Let me kill it. I'm going to kill it off and just bring it back up again. God bless it. I don't know why dragging a chart off of one corner does that to me, but it's 2 days in a row. All right, so look, I'm done with basic stuff. What I would like to do, I mean, we'll watch charts now if you guys want. We can do trades, we can do charts, we can do whatever the hell you guys want to do. I'm totally cool with that. I'm going to let my charts come back up here for 2 seconds, take a pause for the cause, get a drink, and then the rest of the day is yours. What do you want to know? You're probably going, man, I'm waiting for John to say something about this. I lost my mind reading abilities at 43, so it's been 10 years since I can read mine. So I'm going to need you to say, John, teach me this, show me this, I want to know this, gimme, gimme, gimme. This is your chance to get greedy, uh, with my time, which I don't mind in any way whatsoever, but I don't have any more prepared remarks. All we're going to do is watch the market and answer questions and do whatever you guys want to do. So let's take 5 and maybe even 4, and then we'll get back and knock it out of the park for the second half. I want to make sure you guys can hear me okay. And again, look, here's the cool thing about the market is you never really know how far it's going to go. You know, you would like to think but look, we could end up down here very quickly on crude oil. And you have to start, it's not just, you know, again, we go back to crude oil. I just got to get a little familiar with it for a second since I don't really trade crude oil. But again, we haven't been out of this range too much. Looks like they, you know, I spent a lot of time at the 69 area. So anyway, it doesn't. I don't know where we're going, but anyway, I'm just looking at fibs now, and obviously, if we continue with this type of momentum on our trigger lines, because look, this is what happens in the historical pictures. You go, maybe you could have been short right there, and you're like, what the fuck? I didn't see. Could you have been? I don't know. So we have to look and say, what do we have at that spot that says go? That's easy, and I'm thinking the answer is not much. I mean, we have a little fib, but we're really trading into a bunch of kind of trouble. So, again, realistically, that's probably not the best place to go short. With the momentum, most of my momentum traders would probably be happier doing something up here. Just because there's a lot more room until we run into trouble. And again, when we run into trouble, this is why you can't just, one of my favorite pictures of all time, which is funny. Again, look, we're going to make some big decisions right here, and we'll see, what they say. Whether the strength and momentum is going to win out or the short-term termination condition is going to win out. And this is where, if the short-term termination condition works out, all they're going to do is get back to the bigger chart spot. Right? Remember what I said about terminations? They are not the end of the big trend. They're the time when you stop taking 5-1 short trades. Right? Or whatever chart you're trading. So it's not, and again, going short now, remember when we had talked about not going short on the wrong side of the triggers? So this is a really good indication, and watch, it'll probably drop 100 points, but again, there's no easy way to sell any of these bars because they're all closing above the small triggers. You see that? So it's not just that we had 3 divergences, or it's not that we just had fibs. We have to respect the short-term momentum in the market, which says we're going up to 01 to 04. And then, look, when we get to 01 to 04, we'll ask ourselves the same chart reading questions that we ask all the time. What is it? Chances of breaking with trigger, location, and strength. So that's what we're going to ask ourselves. Assuming we get there. I mean, we could stop at the mid-band, of course, but so somewhere in one of these 2 spots, we should stop. And with the large chart momentum at a bare bones, look, this is where, again, as you're reading your chart, you're like, okay, we'll probably get another down, maybe the mid-band, hopefully from the fib. The fib would be better. So I'd like to see it come up to here and then ultimately come down here and get down to the 69, 65 area. Does that make sense? So, 01 to 04, I think is what we said, number-wise. Got to remember your numbers. So, anyway, with the momentum on the small chart, that's why I said we'll probably make the fib. And so far, so good. And then, the only place where there might be an opportunity is going to end up coming in. You can see it. So, anyway, we'll see. And it may never give a short opportunity. This may never happen. I don't know. Let's take a peek. What? You guys do not fall for that bullshit. Please. Yeah. I mean, guys, we don't just go, hey, what's up? How is your trading journey? Now this one, Kurt, that one actually was me. We had put in, we got like hundreds of thousands of leads over the years. I mean, so many freaking leads. And I did get a program, and it didn't filter out the winners, not the winners, the people who bought software. And so if you get that, you can just hit stop. I mean, it's no big deal. You don't need to be sold software, obviously. But it's going through 161,000 old leads and saying, hey, what's up? So, yeah, it's just a little AI program that we use. So, anyway, short version, that one, if it comes from Discord, it's spam. And it's scammers and people trying to steal it. But if you get that message, that was me. Mark's like, oh, my internet's going to be fine for the thing. So I was like, cool. Me and Melinda went out and started celebrating Thanksgiving last night. I woke up at 8 and he's like, oh, my internet's not going to work. I'm like, oh, all right, I'm back on. All right, so we are chilling at the moment. Not much going on. Let's go. Let's see what the old NASDAQ says. Oops. Dang it. I have a workspace open. Close that. Oh man, I don't have my workspace open. Okay. Let me open a workspace. Hey, do you guys have something you guys want to talk about? Is there anything that I can help you out with? Something that, you know, something that you need help with? Something you have questions with? That's the whole point of this room. It's not, you know, I don't want to just have a dissertation and preach to you guys. That's not what it's about. I want to make sure that you guys are getting what you need. Making sure if you have any questions, if you want to go, the other thing that we haven't gone through, my trading plan. And it's been very interesting, with this addition of everything that we have going. I mean, we have so much stuff going. But with the addition of using 60-minute charts and 15-minute charts and kind of getting that big picture, these trades for me, I mean, look, trend trades are trend trades are trend trades. And my trading plan is the same exact as is the market coming from a good top or bottom. If I take a trend trade without a good top or bottom prior, manage quickly. That's it. It's really that simple. So again, odds favorable momentum. This is the exact same trend trade, everything that you guys have all known. The only difference for me is, Andy, man, we went through 27 little things last week. I mean, it's just so effing incredible. When you make data connections to the exchanges, to the brokerage firms, to the platforms, and man, there's a lot of programming that I underestimated. I mean, we're within weeks away of being done. I just don't know whether it's 2 weeks or 3 or 4 weeks, but I want it right. I don't even care if it's January 1. That's always a good launch date anyway. But I think we'll be done in a week or two. But I'm still gonna have to deep stress test it. So it may be January 1st or 2nd before we actually launch. But it shouldn't go past that at all. It's kind of hard to launch over Christmas and holidays anyway. So anyway, but I just want it to be perfect because I don't want anything that we put out to crash or have issues or anything. So we're going to, in our prop firm, we're going to make it so damn easy to win that, you should win. You should win consistently, and everybody's going to have a really good time with this. So it has to be right, not fast. For me, again, look, I've seen the software work quite a bit, right? I'm pretty darn good at saying, yes, it's a top or a bottom. And this is where I start breaking out the market flow. And, if I get the right looks on all the big charts, I want to get in as quickly as possible. And that's really where my plan kind of differs from a new user's plan, is because a new user, they don't really have a way to get in quickly. I know we teach our HVA trade, but for me, it's areas that are supposed to hold with divergences from one to ones even, and it really comes down to this white paint bar. This literally is the trade. Here, let me just blow it up so you can see it. Again, look, it's really easy. It's not difficult. It doesn't always work, but when it does, it's freaking awesome. And again, it's have to have a really good bottom. And then all I'm looking for, look how simple this is. The white paint bar that goes up that's above the triggers. So the 8-3 triggers, my super fast triggers, have to be going up, close above it, and then I'm going long right there. So that's it. It's a white paint bar up, above the 8-3 triggers going up, above all the triggers, done. Go. Hope for the best. And usually you get the best. So again, this is how I personally use the top and bottom areas when I say they're going to hold. There is no wrong chart, L. This is a 21 range chart in this example, yes. But lately I have been using a 1 minute chart. So, for example, let's just say hypothetically we were going to have a good top up here. Can we say that? So, I don't know what the other charts look like. I could look at them, but here, shit, we'll look at them. What the hell? We'll bring it all together. Where was that spot? Sorry. 9:45, 9 o'clock this morning. Okay, so got to go back a bit. Okay, so this is that spot. Nope, shit, that's not even that spot. Damn, NASDAQ moves a lot. Okay, this is that spot. So again, can I comfortably say, at the high that we're going to stop going up? It was beautiful on the range on the other chart, but not this one. This is not one for me that I would be saying, hey, we're going long or short right here. It was cued on the market flow chart over here, but there was no real good termination over here. So for me, I wouldn't be going short until, remember, we already talked about this, but we'll do it again. One divergence followed by a lower divergence, and then the triggers crossing. So one divergence, two divergence, trigger strong, find a short. And whenever you get this pattern of lower divergence, it has a tendency to make the market smoke quite a bit in a direction. So, and like everything, we always, eventually you're going to get a pullback. Pull back to the mid bands. If you're waiting for all the triggers to roll, that's your next trend trade area. This mid band area, for me, this is the type of area where I would start looking for that white paint bar short again. Does that make sense? Because it's like, we're going to make it to a fib, then we have unfinished business. So you have two spots, right? From here, you can start watching for it. I think anywhere inside of this box, you can start watching for it, to be fair. From the time you get to resistance to the time you get to the mid-band. Everybody okay with that? So that's my resistance window for going back to the downside. So with that resistance window, what is that, around 950? This is where you have to go back and you have to study your charts. There's a lot of, ooh, man. All right, you have to study your charts and you have to ask yourself what happened at this spot. All right, so this is the mid-band area. And all this is in 3 minutes, by the way. So that's freaking lightning quick. We didn't have any news or anything, I don't thought today, but anyway, very, very lightning quick. Okay, so this is where you say to yourself, fibs, divergence, multiple divergences. and I want to find some type of short trade right there. And again, when you go back and you start looking at it, again, all these short trades end up looking about the same. For me, anyway, it's the white paint bar that gets below the 8-3 triggers right there. That's the paint bar that, for me, somewhere inside of there, that's the short. Does that make sense? So I'm waiting for, can't do it at the high, you're not trying to. I'm doing it after the 8-3 triggers are going down and we close below, so we've got some momentum. And then, again, when they're a good top, obviously, there's a little bit of money to be had there. And again, for me, I've been using the 1 minute in lieu of the 21 range, but the 21 range is still freaking awesome. I've done it for another reason. I don't need to tell you why, but anyway, just experimenting with it and really liking it. Let's put it that way. And look, if you go short around 21.050, give or take, you had easily 20 points in there before it even blinked. So all the way down to a fib and a pivot stop out, that's a great trade right there. Again, you can see just looking at, remember we talked about trigger line reading? It's really, it's so simple that once you get it, look, once you get all these bars that are going up above these faster triggers, you're not going short. Remember we had talked about the momentum is going to carry us up to the high? And then it's just the same thing in reverse, right? You get the high, and then now we've got trigger line momentum to the downside. And that's all I'm doing, guys, is trading with trigger line momentum after a good top or bottom on the other chart. That's it. All right, now let's get us back to live. Do you guys want to do live crude oil or live NASDAQ? How masochistic are you feeling? All right, let's see. All right, so we have a vote. Well, we can do the crude oil in about a second, and then it takes a while for crude oil. I'll try to do both. We'll see what happens. Picked the wrong week to quit drinking on Sunday night. Whew. You know that old airplane movie? So much fun. All right, so first things first, NASDAQ, guys, obviously, termination condition. Look, we've got holiday conditions, which means what? What the hell does that mean? Well, the market could have really thin spots in it, so it could burst to the upside really quickly or go to the downside very quickly because there's not as many people playing. So when the big traders, put in big orders. Anyway, look, large triggers are going up. We're going to have to break above this termination condition, which we may very well do here in 2 seconds. And then, we'll see. Have the triggers broken above the divergence line yet? Check it out. They're up, but have they really gotten above that divergence line yet? Not yet. So again, look, probably going to be closer to support that's going to take us up to resistance. If you're going to even trade into the termination condition at all. And that's really where you guys as traders, you take these, it's like, should I trade into a little termination condition? Why would I do it or why would I not do it? And again, for me, that all rolls back to the 1 minute chart. And if the 1 minute chart says, yes, I can do something, then usually I like to do it. So again, for me, this is where the 1 minute chart, see how the triggers were not great right here? And then after about right here, the triggers, after that bar, the triggers started rolling up, and my 1 minute chart agreed with what the other chart said. So that would be a spot where I could take a long trade. Now that the 1 minute chart actually agreed with. And that's all I'm doing with my charts, guys. I mean, it's not rocket science. So I'm getting my read from the big chart, just like everybody else. MB, yes, I am using the 8-3 and small triggers. And the small trigger crossed up or down the color of the background. But I found, man, MB, you're going to love the crap out of this. The high volume areas, lines on the 1 minute chart are freaking ridiculous with this trigger line. I mean, I know MB knows he knows market flow things more than anybody else. I would say he's top market flow, high volume trader in Nexgen's realm. We all just try to catch up with you. But when you get a good top and you get these 1 minute market flow areas, oh my God, they're so freaking terrifyingly good. Anyway, and it also creates the spot where you have to break, right? So we've got fibs in a high volume area, which we haven't broke, but we have high volume support, which means blah. The market's not going to do much. So we're stuck in between support and resistance. Welcome to Turkey Day holiday. I think there was an opportunity, maybe one, to take a few ticks. Ultimately, look, if this high volume holds at 05, okay, I want you guys to get this thought process. So let's just say right here, I'm going to draw a circle. This high volume area holds because of the strength of the triggers. See what I'm saying? I mean, it's kind of I'm not saying go long. I'm just saying, before we would even think about going short for any reason whatsoever, right? So right now it's got to lean to the long side. I know the triggers turn down, but they always do, and then they go, ultimately we'll end up here at 29.37 eventually, perhaps. So anyway, all I was saying is if the high volume lines don't break, they become, terrifyingly awesome support and resistances. And again, we're stuck in between two right now. So, hey, welcome to holiday trading. Triggers are suggesting, with the strength to the upside, that they're going to pop. And, again, we had talked about 37. So this is that number just on a 1 minute chart. So, again, does everybody see this? It's really not difficult. It was the large charts that is okay. The range, you could use a range chart, probably even better sometimes. I use the 1 minute because I'm trying to do something different with some larger charts, but anyway. All right, so anyway, look, I'm going to watch this chart. Number one, I think we were going to make it up to a little higher level. But number two, you can see we've got, look at the battle. It's high volume area battle, high volume area battle. The resistance is going to lose in a second, maybe. Just because of the strength of the triggers. It should, anyway. Should give a little push higher. Does everybody understand that? If you took away all the bars and the fancy... Here, watch. You guys ready for this? Okay. All I have is triggers. So when I'm saying that we're probably going to go make it up to 37, which is the next area on the bigger chart, you see this? So again, we had fibs, I think, over here. I forgot exactly where they were, but and the triggers suggested that we were going to go higher. And that's all it is, guys. This is the secret to my 1 minute chart use. When the triggers say up and the other charts say up, I take a long trade. Woo, craziness, huh? What is my view on holiday trading? I say trade the shit out of it, Steve. Follow the rules, do it right. If you lose a few of them because the perfect rules aren't working, quit because it's off. But usually holiday trading is good trading in my opinion. As long as you're not trying to make something happen and you're really waiting for the right look, I don't think holiday trading is any worse than any other. Sometimes it's just the market becomes range bound. So, in a holiday situation, sometimes it's a good idea to take your profit a little quicker and not try to run, super. I forgot what template I run. Dang it. No, that's not it. All right. We'll get rid of that for a second. So look, remember we said we were going to go to 51. Obviously, we're not looking for long trades anymore, right? At the moment. Again, the confidence to maybe stay in a trade a little bit further. Hopefully, you can kind of see how that 1 minute chart gave you a little more love for staying in, maybe for 37, whatever. Obviously, now we're in a range, but the top of the range is held. So again, look, to do easier long trades, you're going to have to either take out the low and roll up, or you're going to have to take out the high and keep going. Obviously, we've got a lot of support down here, but usually once they make divergence at the top and the triggers are rolling down pretty strong, we're going to pop through these, short-term supports. So, anyway, 21 range may be better on holiday trading just because the range isn't as big. Yeah, I don't even know how thin it is. It doesn't really matter. As long as you get your trades that you're looking for and the rules are met, everything usually works out okay. Okay, let's look at crude oil here. And again, look, remember we had already drawn this box in on where we were going eventually. So, this is a really cool thing. When you draw a box, look at where we were drawing this box. We were drawing it way back over here, and we were saying to ourselves with a good top, there's a potential that we're going to go all the way down, to a next big fib. And, there's at least one easy spot in here. Obviously, if you have to wait for support to break, right? So blue fib support turns into red fib resistance. See it? So blue support turns into red resistance, and lo and behold, maybe a short opportunity to get down into the support window. What do you guys think? Could you get on board with that? Yes, exactly, Kurt. Did anybody do that short and crude? I hope to God somebody has a picture for me. And if you trade crude oil and you didn't take that, what the hell? I want to know why not. All right, so look, you say to yourself, John, I was scared. I didn't know I should take a trade. So look, I'm going to break out my 1 minute market flow chart. And is there anything at that area that kind of makes you think that there could be some help in your trend trade short thoughts, endeavors? It's the HVA, isn't it? The HVA line, magenta line. I'm telling you, on the 1 minute chart, man, those little fuckers are powerful. When the large chart agrees and the triggers agree, but man, one of my favorites. Anyway, so this is where that market flow line was. So, I mean, I think it's perfect. I don't know what to say now. We may get one more little push down to get to the bottom of the zone, and then we'll see what happens. It's getting to be tough. It's either do or die right now. And the reason I say do or die, again, look, see this big bar right here? This big bar, realistically, on the market flow, if it gets taken out, we're going to go all the way back up here again. For me, I really start to worry about my position. It'd be nice if they got to here. That's kind of the ultimate landing spot. As they start to get above all of the triggers with white paint bars, usually if we take out the high of that, I'm out. It just, if they take them out, they usually keep going. I'm betting on there would be one more to the downside, but it becomes hard to take. My guess is you get one more, but we'll see. Okay, so it's going to take a minute. So again, just for me, again, I think this was ideal entry. And like I said, usually they're not going to take out, the big down bar. That's the way I look at it stop-wise with the market flow. If they don't take out the big down bar that broke below the pivot stop out, then they're not, then they'll go finish the move, which now it's a little bit late, but late is still fine. There's at least 10 points in there in ticks. But you can see we should go probably make that one more down move that we were talking about. That'd be my guess. And then when we get here, then we'll have to evaluate conditions and things of that nature. So we'll see. Anyway, you can see it on the other charts pretty much just as clearly, right? Hopefully. Little mid band right there. Really have a lot of junk down here. And look, if we'd have to break all of this in order to keep going short. So, this is where the second divergence, or if you were short, the second divergence would get you out. Does that make sense? My guess is that, we shouldn't take out now the top of this white paint bar. So if you were short, and that'll also be the same spot at which you normally will get your divergence. And then now probably shouldn't even take out the top of this white paint bar before we finish. So again, using the market flow not only for entries but for management is also not a bad idea. Anyway, we'll see if we get that last push. The trigger lines they haven't given out, so I still have hope that we should get to what, 27 to 24, give or take. Yeah, we'll see. I never trade crude oil, Jerry, ever. The only reason I'm doing it in here is because it's slow and it's not insane. It's the same workspace as on the website. The only thing I did is just build a market flow chart with a 8 range template on it. It's the same, whether it's minute or range. You can use a range on a minute chart. Market flow range template. Blah. Midband held for, well, I don't know what that means, Kurt. All right, look. Now we hit the spot. Literally to the tick. 24. Bam. Now, we'll have to see if 24 breaks or if things roll up again. What the midband is where you'd probably be doing your last short to get to 24. Is that not clear on that? No, well, I use the market flow for stops. Kurt, or Morgan, sorry. So let's just say hypothetically, I'm going short at the high volume area to go short. Okay, now I want the market to tell. So, again, is everybody okay with the idea of going short at resistance, high volume areas, triggers down? You okay with that? So once we start going down, so again, you're getting in, and I'd probably have my stop up here somewhere. And then ultimately, as we start going down and we make these down bars with high volume areas below the area, then I would bring my stop down to, here, let's do a stop like this. I would bring my stop down just, and again, I'm just looking at, let's see. Tell me if this is okay. I'll just save that as default. So, shit, where'd it go? That's just horrible color. All right, sorry, bad color. It's my first time playing with crayons. All right, I'm going to do a white stop. How's that? I'll make it 8. Okay, so here would be my stop after we start making bars going down. And, again, assuming I was in from 65, which I think is a fair assessment, right? That's the spot. So again, as we start to close below all of the trigger lines and we have divergence, I wouldn't really risk much more than past the high. And then ultimately, as we get down to, a pivot stop out low, if you were going to take half, obviously this is the first spot to take half. And, it's the spot where they have to make decisions, right? Whether the outer band and divergence is going to hold or not. And for me, this is the bar that exemplifies what the decision was. I didn't have to make it, I just see it. So the decision was made to break this. Everybody see that? That's just the way I look at it. So now that they've made that decision, look, you can kind of see where, they're just not getting above there. So I'd bring my stop down to here. So that way, they would have to take out this area where they made that big bar decision. Just think big ass bar that breaks something. That's your decision bar, right? So make them take that out to come get you. And then that's why I said we may end up with, another short trade from the midband to get down to the last area, which, eventually we made it down there. Now, when we go up, I would move my stop to here, especially after we, start making a big bar down. I would probably move my stop down to here as it's going, and then obviously you get out because you hit the target. So, but anyway, I'm using this structure, if you will, to just say, look, where's my decision spot? Stop above it. Where the decision spot? What did they decide? Stop above it. Here's the retracement. Here's the 5-1 midband. What's the decision? The decision was down. Stop above it. Does that make sense? Hopefully. So, and then if we said, hey, here's a low, this is the type of, white paint bar getting above everything that would spur us into thinking we have a bottom in place, and now we're going long back up to, whatever up here. This is all simulator, so I don't know if we're going long or not. But anyway, a little premature. Usually you get a pullback, but do you see the thought process though? We, I can't say for sure we've got a good bottom over here yet, so it's a little premature. Um, anyway, we'll see how it goes. Going counter trend is a very difficult thing. So I probably shouldn't show you how to do it, but anyway, short version is, this is just the white paint bar that says go. If it gets taken out, usually you can be done with your trade, like right now. They usually don't take out the low by much, but anyway. You can see it might be a bit premature. It's always okay to get out. You can, if you realize you're wrong, just take your $60 loss and get out. Wait for it to be more right. Anyway, I don't think it's necessarily wrong. I think it was a little bit early. So we'll wait for this to be a little bit better. Anyway, hopefully that was helpful just stop logic wise. My guess is that unless we break 24, we're done going down. So if we break 24, then we'll go start looking at our market flow chart. Does that make sense? So you have a line in the sand down here, and basically two lines in the sand. Break above the mid band or put in a second higher divergence. We're going up. And then the fibs will hold. Yeah, I've just got out a little. I got in a little early, and anyway, we'll see what happens. So again, what I was trying to illustrate is this portion of my, and again, look, these trades are freaking awesome when they win. I mean, and this is, I want to give you guys some type of realistic perspective. The market can present a very good top or bottom, supports, divergences, one-to-ones, pivot stop outs, blah, blah, blah. These don't always win. Most of the time they do. Most of the time, with almost all of them, this is the pattern that you get. You get a white bar down, and then you get one bar up, and then it goes next bar down. It's the same pattern almost every time. And you can see it here. It's white bar up, one bar down, next bar long. So the low is good. We should have stayed long, could have got long, whatever. Anyway. But do you see what I'm saying? We just want to take advantage of knowing where these hot spots are. So again, I'm trying to find another one for you. There was one way earlier in the day. That's just a good high volume area. But anyway, as you guys go back and study this, you'll see it's not terribly difficult at all. But anyway, should have stayed long from where I was. I got out. Hyper thinking, I guess. All right, let's see where they're going to go. Somewhere over there? We'll see. And then look, I would use the market flow and say, look, I've got multiple bars up. I would really like to see one more push here, because we need to close above this right here. See the white paint bar high volume area? When we get a close above that, we'll have a green high volume line helping us out, which we don't have yet. So, anyway. All right. Now, trade and money management. Again, look, everybody's going to be a little bit different. There are times where I run a 35 tick stop sometimes on the NASDAQ. The white paint bars or the 1 minute market flow chart sometimes makes me have a bigger stop than this risk management says. And the reason why, unfortunately, it's just par for the course. All right. For me, and again, I've got trailing logic in here. um, used on the market flow. This is on a range bar chart, so but it's very consistent on pretty much any chart. Whenever you have, this is kind of what you're looking for off of a bottom. They went down there and stabbed out the low again, so we lost 90 bucks. Um, we'll get to it in a minute. But this is what we're looking for. See the white paint bar? Get the white paint bar up. Almost always you get a little pullback bar, and then you're off to the races. And that's really, again, when it works, it's freaking genius. And when it doesn't, you're going to take a loss. So anyway, my first attempt lost 90 bucks. So they came down here and stopped out the low, but we're not giving up on this as potentially being a bottom yet, right? They haven't broken it. So they've got some work to do in order to break it. And if they can't break it, guess what's going to happen, guys? We'll go up. If they break it, we'll go down to 93, 68, 93. Give me 2 seconds, guys. I got to refill my water. And the battle rages on, huh? they're not they're not going yet. Look, let's see if we can get a hint from our trigger lines on the market flow chart. So, just as a quick read, I mean, obviously we're in a battle now between. Do you see this market flow resistance with the triggers down? That's kind of a leading indicator that says, hey, we're probably going to pop that low and that your chances of going long are going to suck. Anyway, it's very, very, very consistent with both triggers down, high volume area holds, it's breaking support like we thought. Well, we didn't think it. I mean, we thought long first, which is always cool. Sometimes they don't work. Right? So now that we have broken it, we've got a big decision that has been made. So look, we'll probably pull back to right there and then we'll be going short. So you're not going to get, you're not going to get a lot out of a retracement on this one. If you're lucky, you get 23 or 24. You see this big bar that made the decision right there? So I'm watching that high volume area on that bar. And again, I'm going to have to risk above 32. But what I'm hoping is that they come back and retest the high volume area right here. And that's why I put my order in just a little below it. Oh, man, it hit it. That's so rude. All right. Anyway, we got it. So we don't have to risk that much money, obviously. So anyway, does everybody see that? So what I was looking for is a little pullback into the high volume area 1-to-1s, both triggers down. Take a mad guess at where we're going. Down to a fib. I don't know. We don't have to go down to the fib. I mean, anything can happen, but hopefully we just make a down bar here. You know, this is the way I would be. I don't normally trade crude, but what's the difference? We'll see. So anyway, hopefully we stay below this, which is kind of our decision bar. If it gets above it, we may be screwed. So anyway, we'll see how they play. And you see how, you know, sometimes they will come back and kiss this high volume area a second time. So that's why I tried. I'm going to stop on the other side of it. And if I lose 2 in a row, that's when I start to go, silly holiday markets. I'll be careful with it. We'll find out. This next bar is going to be the decision bar, guys. See how we just retested that area? No big deal. So, still nothing technically that says we're going to do anything but go down yet. So, one big ass bar to the downside, and we'll be able to probably reduce our risk a little bit. You know, I don't like to put it too close. Like the NASDAQ, they're just little assholes, and they run stabbed up there. So I'll just kind of keep it a little farther out of the way on the NASDAQ. But I don't know if you have to. I don't think crude oil is quite as squirrely and stopping people out as the NASDAQ is. Anyway, so we now have a pivot from the spot where they retested. And, you know, again, do you want to take half at a prior pivot stop out? So look, right here, if you really wanted to, you could take 10 ticks. I'm more of a firm believer in if the if the 1 minute market flow chart says you're going to make it, just chill. Where's that other order? Put the second order down here at that farther fib. All right, and now it's just relax and enjoy the show. That's not terribly difficult. And again, hopefully this 1 minute doesn't really throw anybody off too bad. It's literally triggers going your way is the most important thing on any chart. All right, let's see. So again, look, as this starts to expand, you can kind of see we got another white paint bar down. Our trigger lines are pushing down. We're probably going to get a decision right here where they're just going to haul balls and take it down to the support, but we'll see. It is holiday trading. Questions, comments, concerns, anything you guys want to do? Does everybody understand it? I mean, it's pretty straightforward. Big charts are going down. Small chart trend trade. Even if you didn't have a market flow chart, you'd be in the same trade. I believe I'm a little more confident with my management using the market flow chart. That's really where the difference is for me. The comfort of this thing is freaking says it's going, so I don't have to worry about it. It'll probably go. If they don't, then whatever. So there's your first 10 ticks if you want to take 10 at the prior low. I don't see a lot of reason to do it other than it's a holiday week, so taking a little bit of money never hurt anybody. But I say make them come get me. We'll see. Now, here's the other part. I want you to think about this. If you're doing funding firms like Apex where you have open equity drawdown, you know, that's a different approach where I think you should take some money along the way because, you know, the drawdown against you, even in open equity. When we do our funding firm, guys, there's going to be none of that bullshit. Your drawdown will be what you make or lose. Because I don't want people to be scared to stay in positions and hold to the right target just because of a drawdown. It's just not good trading. You know what I mean? So anyway, short version is we're not going to have all that intraday drawdown, intra-trade drawdown BS that those guys go through. It's just not going to happen. We're going to make it easy. We're going to make it easy to stay in your trades. We're going to make it easy for you guys to win. Because look, if you guys do this right, I mean, look, we spent 20 something years getting the whole thing right so everybody can win. So, obviously there will be a lot of people out there that don't have a winning plan, that think that they do, but we'll be able to either teach them to win with our plan or they can win with their own plan. And I just want to make it easy because we're going to copy everybody's trades and make a bunch of money that way. I mean, that's the short version of the funding model business. You guys know that, right? I'm giving away the secrets. They take the good traders and they copy them. So that way anybody who gets paid, they're getting paid out of profit that the copiers make. And then ultimately, if they continue to do well, that's awesome. And then the ones that don't, obviously don't get copied. So I think that's the trickiest part of the funding business is sorting out who to copy and who not to copy. Right? All right, so our pivot stop out has held. For me, it's like, look, I look at this, and this is, look at this decision bar that we had. I call it a decision bar. It's kind of, where they made up their mind. Look, all we did just there is we came back and retested the high volume area of that down bar. So I would expect us to stay below here before, if it doesn't, then we'll start to probably worry about getting stopped out. But it should probably stay below 23.24, which is the high volume area on that big bar down. And then if we make a bar down from there, I'd bring my stop down again and finally get to no risk. So we'll see if that holds true or not. All right, so there's 24. So 24 should push it down if it's going to. If not, we may be in trouble. Anyway, yes, Rob. And here's the other thing. We've had to write all of our, it's not just opening a funding business. We're doing like 6 different things. We're also opening a copier business and writing copy. We're actually doing testing on the copier starting today or tomorrow. We started last week, failed miserably, just because the accounts didn't sync, not because the copier didn't work. So anyway, a few touch-ups over the weekend, and we'll get back to it here later, soon enough. And look, you can see the merit for a new person, right? Getting in, taking $100 plus, maybe not risking so much money on a trade anymore. Anyway, they're just coming back up here and testing they made a decision to go down, and then they come back and poke at it again. And then now, look, they've got done screwing with everybody. They should just run down really quick and get to the fib and give us our easy money. They don't have to, but yeah. So, Rob, that's how winning traders get paid. Because, you start off on sim for an eval, and then if you go live sim, which is not real money, but we still got to pay you anyway, that's where we watch people, and if they do well, we got to copy them, so there's money to be paid instead of out of my pocket. So when I have a consistent winning trade, I can be confident using your trader. I don't know, Rob, I'm missing something in the translation there. Will the trading company be available this year? I imagine it's going to be done in a couple of weeks, but we're going to have to really stress test it with, hundreds of users. So I'll probably let everybody have free accounts and stress test it if you guys want to beta test it and see if you can break it. So we'll see. just have a couple weeks before we get to that decision-making spot. I was hoping to be able to go live December 1st, but it's creeping up on is going to be January 2nd. Can you do 3, 5, 10 lots? Yeah, we have it so you can do up to 10 lots on a $150,000 account. I think we might make it 12, but I actually set it up like if you're on a 25 grand account, you can't trade more than 2. Anybody that says you can trade 10 or 15 contracts on a $25,000 account is fucking criminal. So I'm trying to make it so the drawdown doesn't kill people, and you can't over leverage yourself so much. All right, guys, look, now these little bastards finally making a decision. See that? See how they said, okay, we're done dicking around. We retested it long enough. Now let's go ahead and go. So another little push would probably do this, and then that way we'd have, you know, $50 risk a contract. Pfft. I mean, what could go wrong? Lose 50. Well, you know the published price and what we're going to actually get in the beginning with all the specials that we're going to be running are not close. You know that, right? So, I mean, our normal prices are basically in line with everybody else. They're not off that much. So again, we got to run some specials, and especially for you guys, and get you guys going a little early. But here, I'll show you the thing. And look, this is, you know, so technically it's not online ready to rock yet, so it's getting really close. But like for example, you know, $3.99 is within $20 of everybody else's $150,000 account. So the difference is a $3,600 a day loss limit and a $4,800 end of trade trailing drawdown, which there's no fucking way you should come close to that. I mean, you should never ever come close to drawing down 4,800 in losers. If you do, then you're not doing something right. So we made these drawdown levels really big, and you know, and it's end of day static, you know, drawdowns versus the other types of drawdowns. So come on, man, this thing is really, see how we're fading out here on our trigger lines? We're losing our momentum. It's like at some point it's like, I mean, I'm just going to leave it alone, but at some point you have to go, man, we gave it the college try and it's just not going yet. You know, they're probably going to come up here and stop. This is what they always do. You guys ready? Watch. I'll move it out of the way. So I would have been stopped out for $50 a contract. But they'll come up and they'll poke this high volume area and then they'll drop like a brick. They do it all the time, especially when they miss it by a tick or two. So, well, no, I lost a little bit extra. But anyway, you could see that we were starting to get in trouble with the triggers, and lo and behold, we did. Oh well. Anyway, that only took 2 hours of our life, for, you know, and that's the other part about trading crude oil versus NASDAQ is, you know, it takes an hour for that trade to set up, and you got to sit in it for an hour, and then you got to wait, and then ultimately, you know, there was 9 trades in the NASDAQ at the same time, of which 7 of them won. So that's the difference between the two markets. Oh my God, Joel. Okay, so like when you do Apex, okay? So look, I'll show you the differences just from our website. I can't wait until it's just us. By the way, I'm hoping that we're doing a whole redo of our website. I'm hoping that that's done by the end of the week, beginning of next week. Anyway, that's off topic. Sorry. Um, anyway, a little modernization is coming. Again, so everything is going to be modern new funding, modern new Nexgen, blah blah blah. On the Apex trading, when you do a trade, oh fuck, I don't even know. And again, there's good and bad about everything, but in Apex trading, when you do a trade and you're up $1,000 on your position and you close out 500, you didn't win 500. You're down $500 in drawdown. And then the next trade, let's say you lose $300. Now you're in an $800 drawdown, but you're still up $200. So, and that's how they screw you, if everybody knows that, right? Everybody knows this by now, hopefully, most people. Now, Take Profit Trader does it a little differently. They wait to bend you over until after the third date. So you trade your evaluation with no trailing drawdown, but the minute you go into the pro account, they switch the drawdown on you to a trailing drawdown. So you can use the 8 range or 21 range template, Jerry. I don't have synthetic fibs on mine. That's the only difference. So anyway, so what we're going to be doing is we'll be doing whatever you make or lose is your drawdown, which I think is the realist. Because if you're like, fuck, I can't have a drawdown, but I'm too scared to hold on for the winner, it's like that's not conducive for proper trading. So everything you'll see as it all comes together that everything that we're going to do is going to be geared towards being able to trade properly, hold on to your positions, wait for your profit targets, not. Anyway. All right, so what happened on the NASDAQ? We're in a bit of a range, but I think we can all agree we had a pivot stop out at the bottom. So a pivot stop out of divergence, and then look, a second higher divergence. So this is the type of, spot where we say, you can't go short anymore. And then the question is, can we go long, right, on the NASDAQ? And for me, and again, this may not be for you, but there's two places that you can go long. You can go long at the high volume area, which would be right there. Right? The green high volume area is the one. And again, you didn't really have a good bottom until it went up a bit. So that's why I said you got to buy a pullback. Or the second long opportunity would happen after this white paint bar closes above everything. And you've got at least a little bit of room to get back to the first target, which is probably 29. So again, a decent bottom, termination condition with a second higher divergence. This is probably your first pullback. This is the white paint bar pullback. So here, let me label this for you. Oh, it's a mess. Hang on. I'm going to label it on, all right, so 95 was our high volume area. So I'll just draw it in. And then after the white paint bar up, this was the little pullback after the white paint bar. So again, high volume area is a more assertive way to do things. The white paint bar going up with momentum, which happened right here, hell of a lot easier trade. I would expect most of our Nexgen traders, that trade the NASDAQ to be long at, what do you guys get long at? 08, 08.25? Anybody? I'm just curious. Bueller. You know you have to do it at least once. Anyway, strong triggers. We got back to a little pivot stop out, so it's turkey day, but it's a good chance we keep going up. Why would I say something so foolish? Because I'm looking at my 1 minute chart and it says we're going up further. So it usually does. You long at 0775? Perfect. First target hit. I mean, fib with the pivot stop eyes. It's still in a choppy, holiday market. You got to respect that. And then now, look, this is going to be our decision-making spot as to whether or not strong market really does something for us. So, and again, we'll see. Notice we have a white paint bar to the downside. So a lot of times when the triggers are up and you have a white paint bar to the downside, you end up with one more long trade. This is a case where I would probably suggest waiting to close up so you have a bar, so you have a stop. So because if you don't close up above the triggers on this chart, it may not be quite so good. So again, this is a good spot potentially to finish the move, right? Do you guys understand what I'm saying? I don't know if it will or not, but potentially a good spot. We're going to find out if we even get a close. And if we don't, then doesn't look like. All right, my market flow chart petered out on us, guys. Look at that. For me, that says not quite yet. So this is where my market flow chart says I got to break above 18, then I can think about it again. While the triggers start to turn and there's a market flow in my way and two big ass bars down, it's like, no, we're going lower. Can you see it? It's like right there it ended. It's like, yeah. But that was also in line with pivot stop out. I wouldn't go short because the triggers are too damn strong to the upside. So I still like the idea of going up a little higher, but it's really, really, really a tough one. I do. I love them. I use them a lot, actually. So for me, this is where I would use them, Steve. So I know what you're saying. Like all these buyers up here, like this. And what I do, or what I would do, is let's just say I was short. Okay, or let's say I wasn't short. If I was looking for another reason to go short, the minute we stop out these stranded buyers, so you see what I'm saying? Like right when we get right there, I'll put an order in to sell right here when we get back below them, and then I'll put my stop above whatever the high is. So it's a very tight, it's basically a stop out of all the stranded buyers when it should be going down. And they take them out all the time and then quickly reverse. Even if you got in over here, it wouldn't hurt. But I try to get in after they get back below the stranded buyers again. Does that make sense? That's a little tip and trick that you'll see it a lot. I mean, you can go back and find freaking hundreds of these things. But look, here's another one. You get sellers at the bottom, and then they come down and take it out by a tick, and then they go up. They do it all the time, especially in the NASDAQ. So look, here's another one for you. Two stranded sellers, and all they did is get to the high volume area. They get back above it. That's the spot to go long. And you put a stop right below there. Anyway, food for thought. Fun things. And as expected, we got a breakout, or not expected, but we did break out the 18. This is where, man, it's tough. Like I said, there's no reason to go short, and I just didn't have an easier long. That was the easy long right there. That made it more difficult. I'm assuming some of our guys are still long or taking some profit now. All right, other questions, things you guys want to go through. You guys get all your holiday plans set up for the week? Got people coming in? I think we're going to do seafood extravaganza Thanksgiving dinner versus turkey and ham and mashed potatoes and all that stuff. Full house, always fun. Yeah, the old seafood extravaganza. Shrimp boil, crab claws, seared rare tuna, all kinds of good stuff. Anyway, making myself hungry. All right, so short version is probably still going up. Obviously, we've got a lot of monkey business to get through now, so this is really big decision time. Yeah, it's just, I went to keto for a couple months, lost a quick 30 pounds, and it changed my eating habits quite a bit. Not so many carbs feels better. Of course, this last week I've been off keto. I was like, I'm going to be off keto for Thanksgiving, and then I'll go back on it later. Anyway, all right. So, we got to the key area to watch out for, and so far so good. It's still not stopping. And that's the thing about the NASDAQ is you don't necessarily want to, this is the hard part. Apex trading, take profit trader, pro accounts. You got to kind of take that money because it's an open equity drawdown, or at least get tight with it. But the other thing is, look, the really beautiful thing about what we do is, especially with the NASDAQ or some of the markets, you start making some of the bigger trades, so when we talk about, our first opportunities or second opportunities down here, once we break a fib, there's another opportunity for long right there. You can make so much more money on the NASDAQ that it's just ridiculous. And again, now look, we're in a situation where this spot, somewhere around here is going to determine. I drew this box in because this is where the market flow support was, right there. Let me show you this real quick. So you see how they're testing the stranded sellers right here? Steve, that would be where I would put a buy stop order in above it. And then the minute they start going up, as long as they don't take it out again, I'll be long. If they take it out, then it's over, so it's got to go now. And you can almost, pull your stop up pretty tight. And it's a very small stop. And it almost never takes it out. It just goes and goes and goes, but we'll see. Anyway, it could take it out. The trigger lines suggest that they were just running a little stops, and anyway, could still lose. All right, let's take a look at it from this perspective. So we don't want a second lower divergence, right? So realistically, we could bring our stop. We don't want to see a second divergence. The market flow chart and this chart definitely are at odds with one another. So what has to happen is, this this guy's got a break right here on this chart. And if it doesn't, you know, we lose 50 bucks. It's no big deal. We'll find another trade later. But so they're about to make a decision. And we will see what it is. You know, some people even get tighter and say, hey, I'll wait for it to break out. But anyway, we'll see. You know, look, hopefully this market flow helped out. How do you learn the market flow? Commit 2 years worth of your life to studying every bar pattern out there. And we have videos, by the way. All right, so where should we not go below? I mean, technically we shouldn't go below that. But there's your lower divergence. You know, and again, I guess technically I can get to break even. The trigger lines are not bad for the lower divergence, but you know, we have a new white paint bar up. So if we stay above this new white paint bar up, we'll probably be good. If we get below it, we probably won't. So we'll see what happens. Anyway, virtually no risk to stay in. And if we get a new up bar, we'll have no risk at all. Probably fine to have no risk at this point. You see what we're doing here on this market flow chart? And again, if this white paint bar up produces another up bar, then we'll be able to do that number right there. You know, once you get to a can't lose, then it's always a more fun situation. I mean, you can't lose, but you know what I'm saying. And again, we need to stay above this. You know, this is my white paint bar, triggers up. This is where I look. You know, basically I have to stay above this. If we stay above this high volume area, I'm even happier because then it's just not even going to come back. So again, I just watch the high volume areas and I watch the bar structure. And again, if we can push one more time up, we'll get the rest of a move. We'll see what happens. I don't know what's going to happen. Who knows? Can't lose. And again, yeah, break even is never fun, but sometimes you got to do it. So look, on our small chart, look at what we're dealing with here. So these are my little market flow supports. So we're waiting for my market flow chart and fib support and all that to win out and push us on up to the promised land of 57.50. And look, now if you're trading and you say, you know, 200 bucks is my first target, which is in my trading plan, which I didn't do here, but 200 bucks, now you're up money and you can't lose any. I mean, do I really want to take 200? But anyway, here, I'll take 200. Oops, damn it, reversed. I did not mean to reverse. All right, I took 200. Sorry, I accidentally closed it out. That was silly. Blah. Anyway, I did not mean to do that. I just meant to take half, so I got back in again. And again, look, for me, if I'm going to get back in, I should have gotten out, but look at what we got. We got market flow up. They retested the white bar, which is what they do. And anyway, we'll see if they keep going or not. And again, I should have been out, obviously. We were in from here. But I accidentally took all my money and then I just got back in again. So we'll see what happens here. We should stay above this area. Can you see it? High volume area, bars up. If we don't, party's over. So we would love to see an up bar here. May not happen. Yeah, that's about it right there. I guess we had a pivot stop out the top too. Sorry, I'm too focused on my market flow chart. Anyway, you see what we had? And again, I think you could probably stay long. Here's the problem. This chart says stay long, and then this chart says don't stay long. So which is it? And again, the triggers are not strong enough on this chart, in my opinion, to warrant staying in. So we got to break even or better, which is nice. And I think we're back into holiday trading mode where they may have to go poke a little lower, but we'll see. Anyway. All right, guys. Questions, comments, concerns, things you guys want to go through. I do want to give you on that video watch list. This one is a really good one. If you're going to start divvying into NASDAQ futures, that one is a really important one. And then this one with HVA, momentum, and trend trades on crude oil, I think is a really good market. You like the 1 minute chart better than your 21 range? It's different. But again, look, this is where I don't necessarily always watch the Renko bars because they're very fast and they make you do things that you may not want to do. And look, you can see just from a market flow perspective, look, it said long down here. It said long again right here. It said long again right here. It said long again right here. So, again, for me personally, I'm watching a 30-minute chart, a 60-minute chart, a 15-minute chart. So I'm getting a bigger trend perspective. And then when this smaller 1 minute chart agrees with the Renko bars and the larger charts, it's pretty much easy peasy with the trend. All right, questions, comments, concerns, things you guys want to go through. And obviously 57.75 was our 1-to-1 target anyway. And now you can see we got a second lower divergence from there. So probably a good idea to not be long anymore on a holiday week. All right, I am now open for questions. Jonathan, I technically do analysis on larger minute charts, but I'm mostly watching my 1 minute chart for entries. But I actually technically have 5 charts. I've got the 34.5 and the 13.2 NASDAQ, the normal two, these two you see. And then on top of them, I got 15 minute and 60 minute. So again, this is a 15-minute chart. Can you get the white line? Take a picture and point to what white line you think you need. So look, this is a 15-minute chart, guys. And again, the big thing for me when I'm looking at a 15-minute chart, termination areas. Right? So we had if the triggers are going up strong, great. We'll do trades with the 15-minute. If we get to termination spots on a big chart like 1-to-1s and or pivot stop outs, this is where we can start being a little more aggressive at going long. But if you can't break through your triggers, this is what I was saying is that 57 area on the other charts causing us some angst. So they're going to have to work this out a little bit. You're going to have to take a picture and tell me what white line. Are you talking about this one over here? All that is this reversal bar marker price. So 20, 90, 40, that's where the big chart will make a reversal bar up. So let me show you how to enable that on your chart real quick, okay? I know this is crazy talk, but actually going into the old instructions never hurts. So it's on this page, just so you know where it is. And this is your picture right here. And I think I can copy a link to that. Let's see. That might work. Tell me if that picture comes up. Anyway, short version is time frame 1 and 2 will allow you to plot reversal bar markers. But for me to plot the big ones from the big chart, so I use time frame 2, which is my 34.5, and I check all 3 of these boxes. So anyway, time frame 1 will be your smaller chart, and then time frame 2 will be your larger chart. All you gotta do is just check those 3 boxes and you're off to the races. All right, and lo and behold, the NASDAQ is continuing to the downside. Obviously from a termination spot with divergence, take short trades. Where'd you guys get short? Anybody? Now, we knew this 57 area could be harm to us, right, or trouble. So we knew it. All right, so check this out. Look at what happened on our 1 minute chart. So we had the one-to-ones up here, which everybody knew about, right? And then see this white paint bar to the downside that closes below all the triggers? This is the paint bar that says, hey, everything's okay to go short now. The termination was good. Find yourself an area. You know, it only came, look, after it closed down, it only came back right to the high volume area of the white paint bar, and then it was, so a quick 40 points to the downside plus, and it should keep going, it looks like. So anyway, do you see how that rolled over? So that's all I'm doing with the 1 minute. It's no mystery. It's triggers are up, find a long trade. Triggers are down, find a short trade if you're lucky. You know, and again, that's where the white paint bar happened, which was way up here. And then realistically, you know, this is where trend trade land is over here. And now we have hit El Batomo. So we are, you know, we now hit a possible bottom, short version. But look, for me, right, so I'm just going to talk about myself. I need these triggers to be up in order to go long if the bottom is good. How far away from going long am I using this technique? I mean, I'm miles away from minutes and minutes and minutes. Long time, probably 10 or 15 minutes away from going long, even if it is a bottom. So no longs for me, and it's a cool little bottom. That's fine. I'm not saying that you can't get a long trade. It's just for me personally, I lose my freaking ass 9 ways to Sunday if I trade against strong triggers. I think you guys are the same, right? We all have the same affliction. I think it's a bottom, so I'll buy it, but the triggers don't say so, and then, oh, the triggers went out anyway. Anyway, all right. So we will see what happens. Look, I'd love for the area to hold and everything go back up. That's fine. I don't care. Why did I draw this box in earlier? Oh, higher divergences. So we had a higher divergence from there. We had a higher divergence from there. And we had a lower divergence from over there. That's why I had that box there. Remember we were talking about divergence and then higher divergence making a really good bottom? So I was like, what the hell is that box I drew? But it was from back over here. It just so happens to be in the way right now, but it looks like we're still going down. Like I said, for me and mine, with this trigger right here, no effing way am I going long. I'll lose so many times. I don't want that. Has everybody got that? I mean, that's pretty easy, right? Don't go long against strong triggers. It might be a bottom, but probably not. All right, so we wait, and technically we're probably going to keep going down, but I have a little trouble to get through. All right, I'm going mic silence for 2 minutes. So this is your opportunity to look. Mark's going to be back in the room tomorrow. Look, I hope I didn't stray too far from our core simple principles of strong triggers and trend trades and tops and bottoms, to where everybody feels, Mark's like, I hate when you run the room because everybody changes their whole trading plan by the time I get back. Don't change your trading plan, please. Just, again, it's never wrong to tweak, but here's the problem, guys. And like with the ALE seminar stuff that I did, it took me 4 full weeks of really freaking hard work to figure out how it applies into what I can do. It's a lot of work. I've taken 3,000 pictures in the last month working it out for myself, just the addition of what they teach. When you see it, you're going to be like, holy shit, it's so obvious. Anyway. You've been given some golden info, no change trading plan, but some stuff to further back up what I already have going on yet. Yes, I did record. Absolutely. And again, guys, we're at a situation where we got a pivot stop out. It's either about to just fall out of bed right here, or we're going to put a bottom in. The fact that we have a pivot stop out with divergence makes me wonder. This would be literally our last do or die spot right there. So watch. I'm going to look at, it looks to me like a pivot stop out. But let's do this. You see the stranded buyers going up. So we'll say if they get above it and then back below it, we'll take one. And then if they give us a higher divergence, we'll get the hell out. And if not, then we'll try to take more money on it. Everybody cool with this? So it's one more short with everything going down. We're going to watch it. We're not going to lose any. Well, there's first target. All right. What do you think? Pretty cool? Well, that's not too difficult. Now, where are we really going? If we really go down, we're going to probably keep going down. So we'll see. We're going to have to let them work this out for a minute. Do you guys want to see management based on market flow? Here, I'll just put it down here and we'll just see what happens. You're at 15 G's on 3 trades. Nice job, Pete. So look, obviously we had a pivot stop out down here, so I had to take half for a couple hundred plus. So I am out and I'm pretty much break even. Here's what I don't want to take out when I look at the market flow chart. Do you see this high volume area on this big ass bar? I don't want to take that out. If I do, the party's over. So the idea is, again, now that we've gotten to support, let's make a big move down through the thing, and then we'll have an opportunity to, Now we got another white bar down. So watch this. You see that high volume area right there from the white bar? If it holds and makes a down bar, that'll be a new stop. See how I had the white bar, the high volume area. I don't know if it's going to give it or not, but so again, I don't want to lose any money. Shouldn't get a. If it doesn't stop here and go down, it could stop there and go down. So those are the two, spots. We'll see. Anyway, so I'm risking nothing to see if I make $1,000. I mean, that's not bad, right? So, and all I need is one big ass down bar here, and then I'll have money locked in. It really creates a lot of patience. And you give back a lot of money. But, again, look, Kurt, check it out. Or who was it? Steve, sorry. So look, we get above our little strain is, and look, see how they took out that second high volume area? I mean, a pivot stop out obviously is trouble, but once they took out that high volume area, there's nothing in the way market flow wise to help. So that just means they're going to go higher and be done with it. Anyway, maybe not. We'll see. All right, looking at our big chart, would you do one more short trade? What do you think? If you got a down bar, well, no, I guess it doesn't matter. Anyway, I was almost talking myself into it. But again, look, here's where I think the market flow helps me out a lot. Obviously, this was a key spot, and worst case, that was a key spot. But for me, look, now we got a white paint bar up, and we're above our triggers, so I'm not going short anymore, right? The time for going short was over here, maybe one more time over here, and then now we're in a 50-50 mode where could easily run up to resistance, and then we'll have to see what happens. See that white paint bar going the wrong way above everything? For me, it just means up. I guess technically, if it means up, guess what? You could probably go long. I'm not sharp on my game at the moment. Anyway, the market flow read set up, and sure enough, the other chart set up, and guess what happened? It goes up a little bit. Now, I don't know how far it'll go, but market flow still agreeing with more up. So again, I wouldn't get out. I guess if you're going to take half off, you could always take half off at 16. 13 points never hurt anybody, but anyway, do you guys like this? I think it's pretty cool. It's helpful for me. It may not be for you, but big strong white paint bar above everything, pull back to mid-band and fibs and triggers. Don't call me crazy, but I think we're on to something. You got out at 15.50? All right. So you won't be mad when it hits 29? Okay. I think 1-to-1s are a great place to get out. Now with divergence, they're coming back down again. They're going to come all the way back down to here and ruin everybody's day, and then they'll go up again. Probably. All right, guys. So look, we got a few minutes left. What can I do for you? Obviously, they have made a decision about what they wanted to do. Again, remember we talked about earlier that it's okay to take some at a 1-to-1, and when you get divergence from a 1-to-1, man, it sometimes kills the trend really bad. Looks like we're going down again to 86 maybe. You guys want to do a momentum short? See if we get away with it. All right, let's Let's see what we got. We'll do a couple. Okay, so white paint bar down, high volume area of the white paint bar, basically the same place as momentum style trading. You know, realistically, you need your stop up here above that bar, but that's a long, long way. So we're hoping that they don't go up much above this pivot. If they do, then they get bumped. But anyway, anywhere inside this white paint bar, usually they'll give one more push to the downside. So we'll see what happens. We'll look at it from this chart perspective. I think it looks pretty easier. Pretty much easier. Anyway, market flow does not disagree with what we're doing. It's 50-50, but it's not terribly disagreeing. It's lunch on Monday, Thanksgiving week. All right. Anybody else have questions, comments? I'm going to end our video so I can start processing that for you guys. So if you guys have any other questions or any other things you'd like to go through, please let me know. And here's the other thing. Just because I'm not doing the room doesn't mean I don't exist anymore. So I'm always around. If you have a question, ask me. I'm always open. So for broadcast purposes, we're going to wait just a few more minutes here, but yeah, starting to look like a mess, like a holiday mess. Yep. It's not going to go. All right. Well, it's the old college try. Anyway, second higher divergence now, which usually is going to quickly get us up to, remember the spot where we said we were going to get to 28 up there? 30. So now we're going to go finish that move. And again, when you look at it from this chart's perspective, let's just say, we got our white paint bar up. And again, this is where the getting in spot, you know, this is a momentum trade spot right there. Again, can you do a momentum trade with the white paint bar up? You want me to do it anyway? I'll put a bigger stop in. Just, shit, I missed it totally. Anyway, that's about what it should have been right there. Here, well, I'll just pay extra. And then if the white paint bar works its magic, it's going to just propel us up through quickly through 1750, at which we can get break even, and then we can go from there. And since we're in momentum trade, you know, you lose momentum, you can pretty much get out. So there's our pivot stop out. That's what we have to get through in order to make the rest of the move here. Again, you know, how tight do you want to get? I mean, we shouldn't really get below this high volume area right here if we're going to keep going up. To really stay in a trade, you'd have to put your stop way down here, which is just the wrong day for that. So anyway, we should stay above this if we're going to go up. If we don't, see how we get below it? It's like, it's not going to go. Anyway, all right, it's noon.